What's up, world? This is Sophisticated Investing Life here, and today we're going to discuss the top 3 reasons why Warren Buffett loves him some bank stocks. And when I say he's a huge fan, I mean he's a really big fan of bank stocks, with 4 of his top 8 stocks being major banks, and overall about a third of his nearly $250 million portfolio, actually $250 billion portfolio, let me get that right. Huge portfolio is actually in banks, and most of these are well-known banks in the industry, right? So we got Wells Fargo, we got Goldman Sachs, US Bancorp, JP Morgan, Bank of America, and BNY Mellon. This is not the first time Buffett has fell in love with banks. Matter of fact, he's liked banks a lot on and off throughout his entire career. Matter of fact, he made major bets on both Goldman Sachs and Bank of America during the financial crisis and ended up making billions of dollars in profits for both. Now, let's not get it twisted. Partly because he had an unfair advantage, some of that's preferred shares he bought, but overall, he usually is very fond of the banking industry and will support them thick and thin. So let's analyze why Buffett loves bank stocks so much. And I will be making references to another video I made about the key to long-term success in the stock market, where I mentioned different investor types and how to think about those investor types. So if you have not checked out that video, click the link in the card above me and check it out. Come back to this video and then let's get started. So first off, Buffett loves the quality aspects of these companies. Now, the debt is high for all these companies, but it's a bank. What do you expect? They make money through debt. So it's just part of the process of how they make money. But with that said, the net profit margins for a lot of these banks are above 20%, which is higher than the average for the S&P 500, actually more than double the average, which is at 10%. This is very impressive, especially for some of these banks that are worth, hundreds of billions of dollars. It's kind of hard to become that profitable at that size. Digging deeper, we need to understand what makes the business model so special for these banks. Well, why are they doing so well on the profitability standpoint? From a competitive advantage point of view, most banks have high switching costs for its customers. This means that the customer base is usually sticky and they're not jumping around their bank accounts from one bank to another. I mean, think about it. How often have you changed your checking account or your savings account? Even in the midst of all these high yielding savings accounts, how often are you really doing it? Jumping from one to the next? It's not that often. It's not that often at all. And banks know this. And it's why at least the major players like Bank of America or Chase with JP Morgan, they don't offer those high yielding savings accounts. It mess up their business. So what they do is, for example, for a savings account, they give you next to nothing in the interest rate. They're going to take that and they're going to give it to some commercial real estate or a business at a 4, 5, 6% loan, and they collect the spread. That's how a bank works. Now, don't get me wrong, they have other businesses too, but the bread and butter is lending for various reasons. There is also an ecosystem effect that I'm just touching on. So if you're, for example, at Bank of America, you have a savings account there and you actually know the bankers, you actually go inside the branches. Well, why wouldn't you not go and get an auto loan from Bank of America or get a business loan from Bank of America? Or get a credit card from Bank of America. So you got all these reasons to go, and it just builds an ecosystem. The best way I can explain that effect is with Apple. How Apple, you buy the iPhone, you buy an iPad, and then you're on their system, and you got to buy all the apps through Apple. It's just it's that same kind of ecosystem effect. So banks have that, and they use it, and it works into their favor. These are the quality aspects of the banking business, and especially since Warren Buffett's primarily a quality investor. And speaking of quality investing, that is actually part of one of 3 investment secrets that Warren Buffett has to expedite his wealth building process and become the wealthiest investor of all time. So if you like to learn the second half of part 1, and matter of fact, learn all 3 of his investment secrets, make sure to download my free PDF below in the description. We're going to discuss all those secrets and how you can fast track your investment account to get to 6 or even 7 figures in a short amount of time. Now, the second reason why Buffett is loading so much on major banks is it's a little bit of the contrarian in him. Contrarian play on a potential recession coming soon. Now, although the economic growth isn't there in the economy today, consumers are still in a good state with confidence being relatively high, unemployment is near all-time lows, and there's no signs of inflation. Buffett also sees how diversified these businesses are today versus before the global financial crisis. So a lot of investors, a lot of sentiment around banks is still thinking back to what happened, 10 plus years ago, and how they weren't ready for what came, they weren't well capitalized and all of that. That's not the case today. Banks can really absorb what's going to happen today way better than a decade ago. So with the sentiment around banks being primarily negative and people not really giving them any love, Buffett is aggressively buying and adding to positions, which is a smart play for any typical contrarian investor. Now, lastly, the last reason is these banks are rewarding shareholders at a high clip. It's very impressive. Most of these banks have both above average dividend yields and above average buyback yields. So they're paying out dividends higher than average and they're buying back stock higher than average. A little bit of both, which leads to a total shareholder yield, which is dividend plus buyback yield of about 7 to 8% versus the S&P 500 average of 4 to 5%. This is huge because that's double the pressure, right? That's double the pressure. First, there's less stock supply. So based on that alone, and even lower demand, but less stock supply means the stock will probably go up. And now you bringing in the dividend investors, those income investors, right? That's another type where, they love the dividends. If you give them a good yield and combine that with a low payout ratio, you're in business. And that's what's happening here with these banks today. Now, to learn more about why CEO of companies will pay out both, right? Why would they pay out both a dividend and buybacks, not reinvest in the business, and how CEOs think? I made a video about how to tie that all together on how to analyze any stock, no matter the circumstance. So if you haven't checked that video out, make sure to click that in the card above. And it's a really good video. It's a good starting framework for analyzing any stock. Well, there you have it. The top 3 reasons why Buffett loves him some bank stocks. And to be honest, he even got me looking into them. Primarily Goldman Sachs. I worked there in the past, and I think it's a really great business. So he's even got me looking at them in more of a favorable light today. Also, don't forget, download my free PDF on Warren Buffett's top 3 investment secrets so you can fast track your journey for wealth. That's all I have for you all today. So until the next time, thanks for watching and stay sophisticated.